Welcome to Markets Now. I'm Michelle Rook with Bennett, AgMarket.net. Well, after an early start to the plus side, we're seeing the grains kind of back off a little weaker, while the livestock futures are mixed right now. Cattle seeing just a little bit higher prices in some of these contracts. But Matt, good to have you along. Let's start off with soybeans. We had a nice close yesterday above the $12 mark. Saw some follow through here this morning. But what are we seeing? A little profit taking or farmers selling, or why are we off the highs?
I got to think a little bit of both. I mean, you stop and think about these levels that we've gotten off of. I mean, we've traded pushing $1 off the lows, for this soybean market. I feel like there's a lot of folks that are stepping in here saying, hey, I've held on to these beans. Yes, they could go higher. Yes, there's gaps up above us, but at the same time, rewarding the market whenever we rally like this probably makes quite a bit of sense. There's definitely some weather issues in Argentina. It's still warmer and drier in Brazil, but I don't know that that's going to affect soybean production a whole lot, considering a lot of those beans have already been harvested. So you look at Argentina though, and soybean meal kind of led the way yesterday. So you've got to think that that's where the biggest fear, if you will, is that you're going to see a little bit of production loss. And so today just seems to me like it's a little bit of profit taking.
Yeah. And you mentioned Argentina. It was really excessive rains, not dryness, that they were concerned about there, right?
Correct. It's just a little bit too much rain. I guess I may have said that wrong just a bit ago. It's more hedge pressure, if you will. I think there's a lot of farmers selling in here. You talk to our folks, on the cash grain side of things, and they're saying that there's a fair amount of farmer movement. But you get a 20-cent higher move there on Wednesday, and people are going to pay close attention to that. The markets were just as depressed as could be for quite some time. You get in here, you get a little bit of a rally over the course of the last 3 or 4 weeks. Yesterday was probably the strongest one that we've seen. And so I think that there's been a fair amount of movement.
So corn didn't necessarily follow soybeans, Matt. And is that just because this market doesn't really have to worry about acreage, or we don't need any additional acres? Or is it just because we still have this big ending stocks number over our head?
All the above. Whenever it comes to corn, yes, the funds are continuing to cover some of their short position. Typically, you're going to see funds, in a position where they don't want to necessarily be super short going in the growing season. They don't want to be super short if people are talking about warmer and drier in Brazil as far as the safrinha crop goes. And so there's a lot going on here. But as far as the farmer goes, farmers probably still hold on to 7 to 8 billion bushels as far as I'm concerned. A lot of corn there, and so anytime you get a little run up in the market, you uncover a little bit of hedge pressure, you uncover some farmer selling, and I think that's exactly what's going on here. There's no question that the stock situation doesn't make anyone fearful that we're not going to have enough corn acres this year. I think if you got below 91 or even below 90, if we really want to be beggars, be choosers, maybe you get a little bit of a supportive story going. But whenever you're carrying in a 2.172, I'll tell you what, if Mother Nature cooperates and you're 90 plus, it's going to be pretty tough on the balance sheet.
Yeah. So you bring up a good point. We're getting into end of month, end of quarter, going into reports. So we have the funds short. Are they covering shorts right now, like we saw in soybeans yesterday? And will they next week going into these reports?
Yeah, I believe that they are covering some shorts. Most people, I think, going into that March planning intentions report and quarterly stocks, they know that there's a lot of potential, just craziness, volatility. You can get a pretty massive move, and so I've got to think that anybody who's made money, for instance, being short this market. I don't know. I think I would be taking those things off, especially whenever you hear a few people talking about gaps in the chart, whether on November beans 1240 area, May or July, you're pushing the $13 area. Are you going to go up there? I don't know, but technically, I think that a lot of people are kind of rooting for that. So if that's the case, and I've made some money on the short side of things, and I've seen some of those profits erode, to me, I think that you're going to probably cover those before you get into this report.
And let's talk about the report. Let's tee up to that, because you guys came out with your acreage figures, and pretty much everybody in the trade is thinking more soybeans, less of just about everything else. But where are you guys at?
Yeah, so 11 million acres difference last year, 94 and change down to 83 and change. I've got to think, given the fact that corn, just look at cash prices, for instance, that comes from the USDA down almost a buck 80 year on year, whereas soybeans is about a buck 60. Relatively speaking, obviously, soybean prices have performed better than corn, first of all. Now, last fall was a fantastic year for tillage, for getting anhydrous on, for getting everything done you ever want to get done. And so we think corn acres are still going to be fairly stout. It's just we feel like corn acres need to come down and bean acres go up. We feel like going to be a lot closer than where we were a year ago. But we're at 91 and a half on corn, 86.1 on beans. I would not be shocked if we're a million low. I know that there's been some really good estimates out there above 93 from awfully sharp folks. This is a tough one to gauge. We've tried to talk to all of our growers. We've tried to get a really good feel with the people in the industry that we deal with as well. And right now, we feel like we're just going to be a little bit above what that baseline projection was. Last thing I'll say on acres is that there's no doubt that wheat acres are going to be lower. We know that winter wheat acres are lower. Spring wheat acres, we expect to be at least a million lower. So, we're going to be down there in that low 46, so like 46.2. Cotton will pick up a few of those acres, but I don't think that the total combined corn and soybean acres is going to be much above a year ago, especially whenever you look at what profit margins currently look like.
Yeah. So you talk to a lot of farmers. I've talked to a few that have said, hey, we're going to stay in our normal rotation. So where do you think that we pick up or lose the acres? What geography is it going to come from?
Probably fringe acres, if I was guessing. I don't think that you're going to pick up for instance, lose a lot of acres, for instance, in the I states. But at the same time, prevent plant's been low for a couple of years in here. I got to think you might uncover the fact that maybe a few people aren't as excited about planting every single acre whenever you see, for instance, some of these projections show some red ink as far as cash flows are concerned. So, yeah, I've got to think that some acres are going to magically disappear. But at the same time, a lot of folks in the last 2 or 3 years have projected pushing 180. Just seems like it never does come to pass. I have a hard time believing that this year is the year that you'll see it, given the kind of yearly drops we've seen for prices for both corn and beans.
No doubt. Um, the other thing I was going to ask you about is when you look at the weather, if we get early planting, are guys going to have the tendency to maybe plant a few more acres of corn? And,
No,
what
I
about
don't
the
think
idea
so.
that they can bushel up this year?
That's a good question. Okay, what's the fastest way to lower your cost of production? Produce more bushels, right? We all know that. But as far as are they going to plant more corn because they get in the I don't know, Michelle. I mean, I think that that is something that we talked about whenever, 10, 15, 20 years ago and 5 years ago, even. But boy, I tell you what, every year you're seeing more and more growers saying, I'm starting with soybeans. And so is it such a thing that maybe as the planter is set for soybeans for those that are only planting with one planter, maybe they plant more beans? I mean, I don't know. I mean, obviously, you're not going to plant beans if you put anhydrous on, but I don't think that old adage of an early spring means more corn acres. I don't know that that's the case, especially this year. Whenever you look at how tight some of these budgets are, whenever you look at the fact that anhydrous ammonia in many places is running 675 all the way to 800, even though nat gas a buck 70. To me, I guess I struggle to think that these corn acres, are going to grow right now. I think the reason why they're going to be high is because your profitability, your the way that these things pencil out. Corn looked better last fall. And so hopefully people who penciled it out and decided they're going to plant corn did something about the price because by all means, it's changed quite a bit since then.
Yeah. Did cotton pull any acres, do you think, when we had the price run up there a month
You've got to
ago?
think. I mean, you've got to think that you're going to get a few more cotton acres. Is it going to be wildly out of control? Probably not. 11, maybe you push 12. I don't know. I just don't think that you're going to get a massive increase. You got to remember that cotton is such a small player, whenever you're looking at corn and soybeans, there's only so many people that can plant cotton to begin with. You got to get pretty far south to see that be a viable option. And so, yes, you're going to pick up a few acres. I just don't think that it's going to be enough to really push the needle.
Yeah. Livestock futures, well, we've pushed back into the red here since you and I even started talking, but the cattle market initially popped. We had some higher cash trade, 188, $2 better than last week. But it seems like we're throwing a lot of positive news at this market, Matt, and it really is not taking out last week's highs. Are those reversals that we put on last week, intermediate highs, are they going to hold?
That's a good question. I think whenever you look at the cattle market, you look at the chart overall, it looks like we've run out of steam for now. We know there's cattle on feed report here coming out Friday. Tomorrow, I highly doubt that that's going to be friendly in any way, shape, or form. We know January is a tough month, so we were expecting those numbers that came out in February for placements. We're going to be super, super bullish. Yet they were a 92, 93 type ball game. And so most people feel like you're going to be over 100 here for the numbers that are released in March, which would be based on February placements. And so I think you're going to have to get out past this report. Maybe start to uncover some really low numbers, maybe a couple months down the road before you really start talking about all-time highs again. Can we see $200 fats this year? I think it's possible. But at the same time, we've also been cautioning people. You get in the high 180s, that's probably a pretty good place, especially after seeing mid 160s for a while. High 180s is probably a really good place to hedge off some risk.
Yeah, and we could be seeing a little bit of that, people taking advantage of that price. And like you said, the placements number I think is guessed at 106 on the
Yeah,
report tomorrow. So
absolutely.
that's pretty stout compared to the last couple months. Okay,
For
thanks,
sure.
Matt, as
Yep.
always. Matt Bennett with AgMarket.net. That is Markets Now.